All right, guys. So I just want to do a quick recap on what I was trading today. This is DPSI. We're going into the back end of the market, and you can see with this tick chart that the volatility has just come right off. You'll see in a moment where I got into this, where the volatility really picks up, and this tick chart was going crazy. It is 1 o'clock right now in New York, and these stocks usually die down around this time. But what I want to do is I want to start this video off with reiterating the importance of continuing to do the same thing that you know for a fact works out more often than not, and really executing on those high probability trades. I want to build on that idea with giving you some insight into the fact that this particular month, May, so far has been relatively difficult. A difficult trading environment. There's a lot of macro stuff going on. There's a seasonality of trading. The whole sell in May and stay away thing is obviously in effect right now. And stocks have been generally moving to the downside. And a lot of these low float stocks that I've personally been trading, they've been quite choppy. They've been quite whippy. A lot of fake outs, a lot of double tops that are failing at first high of days that have been put in, and just a lot of stuff has been washed out. And so the actual data that I've got in terms of my own personal trading this month has been actually quite mixed. But the one thing that I never do is no matter what, never deviate away from my risk structure. Okay, I never deviate away from that. So again, the actual trades that I've put on for the month, it's not the best looking spreadsheet, to be completely honest. There have been more losers than winners. Having said that, I know for a fact that these things happen this time of year. This is a strategy that I've been trading for a very long time. And so I know that every single year this exact sort of thing happens, so I know how to prepare. And the best preparation is this: understanding what happens historically and then managing anything that you don't know and you can't see by managing your risk. And so with that being said, I've been managing my risk, and a lot of trades have been stopped out, but the risk that I've been taking on has been nominal. The risk that I've recorded has been nominal, and I've known all the way through, and I'm on the back end of a six trade losing streak. It's a little bit high for me. But I do know when I'm going through these periods that all I need is that one trade that matches my reward to risk ratio inputs. I do know that when I hit that one trade, that every single trade that I've had that went against me will be made up for. And DPSI is a prime example of something that just popped up on my scanner. I went immediately to the chart. I saw that this thing had spiked up in the first 10-15 minutes of the morning and then started to sell off. There were a number of halts. It was very volatile, and there was this candle right through here. I want to highlight this candle because this was the candle that I thought, in my opinion, was going to do some damage if it was broken to the upside. So there's two portions of this. You get a low that tests below VWAP and then comes back up over VWAP, and then you can see it closes right on VWAP, and then we sort of coast a little bit lower. Very, very simple. This is what I refer to as a VWAP squeeze. And I was looking at this level at 721, and I was looking at the volume profile needing to get taken to the upside. I also looked at this $11 level that I was thinking that, if anywhere this thing could go straight up into that particular zone. And what you'll see right through here is that price action actually reverses. We come up through VWAP. So what this tells me right through here is that if there are larger traders, larger institutional traders, people like this, they want to get best pricing on stock, and they're typically going to get it either at VWAP or just below VWAP. And then when their orders are fulfilled, price action will rally hard. And so that's what I was anticipating and waiting for, based on this candle breaking long at 772. And you can see at 772 right through here that the volume stepped up, and then the volume confirmed that this was a certified break. And then we took it above high of day. I had my profit targets all mapped out using my profit target taking tool, and then this thing just rallied to all of the levels that we thought we were going to see, both on the high of day of yesterday's after hours high, which is going to be this level over here at 11 bucks. Also on the profit target taking tool that we use, this thing crushed those levels, and then you can see that it started to get a little bit soft, and now we're double bottoming with VWAP support. But I'm already out of this trade. I've been out of this trade. This is the candle that I actually got out of, and I actually sold into strength, but this algo pop right through here actually took me out, I think, at about 10.20. So it's $10.20. But remember, I got in at 772, and this was a short-term meteoric rise, and the tick chart right through here was going nuts. And the only thing that I managed was not where price action is going. I looked at where it could potentially go, and then I just looked at following the back end of the trade, managing my risk, not giving anything back, and making sure that I was completely dialed in with how the risk aspect of the trade worked and looked. So as this thing started to rise, I started to manually trail with my stop to a break-even point, and then to a risk-free position, and then I just kept going, and then I got stopped out on this candle right through here. But I was out at 10.20, in at 772, and that first break above cash market high a day, I went straight to break even, and then from there I trailed in terms of a risk-free trade, and it was a beautiful, beautiful play. And the thing about this particular trade is that this trade has just taken care of every single one of the losses that I've acquired so far this month, every single one, and then added on top of the net positive trades that I've had so far this month. And after this one, I am net positive on the month. And again, there were a lot of losses that were taken so far. There have been a lot of choppy trades, a lot of washouts, a lot of fake outs. And it's just about managing the risk, but that it's also managing the faith in the system that you're trading, knowing that the trade will come back to you. That's exactly what this did. You can see this tick chart's actually moving right now, so the volatility is picking up on this. Am I going to get back in this? Probably not, but I bet you if we crush this level right through here, you could see price action break at 11.45. You can watch this tick chart. We're going to get a little bit of resistance up through there. Having said that, it's all about managing the risk, and it's about having faith in the system. And it's super important that you back test your strategy and know what the probabilities of success of the pattern is. It's also important to know that over a 20, 30, 40 block series of trades, exactly what it looks like, by the way, of how many of these things are going to work out and how many are not. It's about high probabilities. It's about understanding how many trades are going to work out over a period of time, and then just having faith and having zero expectation of which one of these positions is going to be that trade. Now, DPSI is a nice trade. This is definitely not an intraday unicorn trade, but you can see that it's up 138%. And this is the exact strategy that I'm working with a bunch of students on right now at the moment. Again, high probability. It's about understanding the data. I hope that some of this has helped. If you like this video, click the thumbs up if you're watching it on YouTube, and if you're watching it on Facebook, comment below. Let me know what you think.